Welcome back. You're watching Chartbusters here on CNBC-TV18, continuing with corporate conversations. Then Castrol India's quarterly performance weakened on a sequential basis. Margins also came in below the guided band of 22 to 25%. And to discuss the quarter gone by and the road ahead for the company, we are now being joined by Kedar Lele, who is the Managing Director of Castrol India. Kedar, good morning. Thank you for joining in. Your margins are below the guided band. It's been a subdued start to the calendar year as well. Could you tell us what are the challenges that you faced during the quarter and how is the current quarter shaping up as well? We are 30 days into the new quarter. So what's the on-ground situation now as well?
Good morning, Hormaz. Namaskar. Very good to see you and thank you for getting me on the show. While you started with the reflection on this quarter being softer to preceding quarter, I would really request you to really focus on year-on-year performance. And I'm quite satisfied with how the quarter one of this year has been. We have grown our volumes by 8%, our top line by 7%, and the PAT has come at 8%. Now, when the quarter started, to be honest, I was really worried because of the clouds on our larger geopolitical scenario that all of us are aware of, our forex ratios, because the dollar was rupee dollar conversion was getting weaker, and we were seeing those headwinds. And in those circumstances, this performance is really delightful. It's come because of innovations that we have done, because of our market coverage that has gone up, and sustained executional excellence that we have seen in the market. So as a whole, we are very happy. And I keep explaining everybody that the Q4 of the calendar year is not the right thing to compare. We have always given the guidance of our profitability in 22 to 25, and this quarter has come at 22, despite all the headwinds that we saw in the business and the environment.
All right. Hi, Kedar, and thanks a lot for joining in. This is Nigel on this side. So let's focus on the yearly aspect then. What kind of a volume growth can you guide us for the year? And as you said, last quarter had a couple of headwinds that forced the margins to come in at the lower end of the guidance band. Given that a couple of input costs have cooled off, you're focusing on some operational efficiency as well. Should we see an improvement in margins in the coming quarter?
I resist from giving a forward guidance on the business, to be honest, because what keeps us going is a good insight on the long-term focus on our segments, which is trucks, cars, and bikes. We stay focused on how we land our innovations, like we did with Shah Rukh Khan taking the Garmi Baby 3X prediction during this quarter. And that, of course, in the summertime will become more relevant for all of us. And we keep expanding the volume growth for the business ahead of the industry. If we did that with discipline, I have no doubt that earning per share will continue to grow handsomely in the time to come. Now, you asked a question, and I should say that in this quarter, the team prioritized on our ASP investments, which is advertising and sales promotion investment, and it was much higher than what we have done in the past, almost 45% higher than what we would have done in the past. And that augurs well, because in the beginning of the year, when we invest behind our brands, that creates a fuel for growth. So I'm quite pumped up with the strategic choices that we're making and the performance that we will deliver in the time to come.
Kedar, you spoke of investments and that they have been substantially higher behind the brand. Does that continue for the rest of the year as well? And if so, does that impact your margins, or do you maintain that for 2025 as well, you would remain within this 22 to 25%, maybe slightly higher than what you reported in 2024?
That's a great question, because the everyday balance that one needs to do while running business, as they say, walk and chew gum at the same time, deliver the volume, deliver the margins. And I genuinely believe that being able to do that on a daily basis, on a monthly and a quarterly basis, is the art of running a successful business. So you will see us driving growth on volumes. You will see us investing behind our brands, being more, bringing ourselves closer to our consumers, innovating, and then performance will come out as profitability for our investors and stakeholders.
All right, Kedar, you're refusing to give us any numbers or avoiding it at least as of now. Maybe the next time around we'll squeeze you on some numbers. But for the time being, at least give us some inputs, on the EV opportunity, the data center opportunity as well. You all were talking about that in the past, but I think the last couple of quarters that's been missing. So if you could tell us what is the opportunity and how are you all progressing on both these two fronts?
Yes, I think, Nigel, great question. The challenge in front of oil and gas industry, and maybe specifically for lubricant industry, is to be able to perform while getting ourselves ready to transform for the time to come. And both EV and the data center opportunities are small at the moment, will become larger as the time passes by, and will become core to most of our industry in, say, 10 to 15 years. Now, are we ready for that? The answer is absolutely. For example, the Castrol On range of products, advanced transmission fluids or coolants, are the products being used by the EVs in India and abroad. We have invested huge amount of capital in our research and development, both in London and in India and across the world. And that prepares us for the transition that will take place. Why I don't talk about it in my result conversation is because the contribution is insignificant at the moment. It is exciting to talk about these things, but does not make a difference to this quarter or next quarter's results. So it's important that we keep performing while preparing ourselves to transform in the time to come.
Will you be setting up at least a separate marketing vertical for both these two segments, EV, data center as well? If you could give us some clarity on that front.
So thing is, if your customers come from a different segment, you do need dedicated manpower to service those. And we've already created those manpower cells across functional team to be able to approach those customers, work with the opportunity, and of course, tap them in the time to come. It is a different route to market. When it comes to EV, it's the same because most of our current OEM partners or OEM customers are in fact evolving. Tata Motors is the leader, and we are a very frontline partner when it comes to EV fluids for them. When it comes to data centers, it's a different business, and we have now dedicated manpower which is working with some of the large data centers which will go for immersion cooling or direct chip cooling, which will involve our coolants and fluids.
Paucity of time, Kedar. So just bunching two questions into one. If you could share the volume growth number for the first quarter, what was it? And if you could break that up as well as to what led to that number. Was it personal mobility? Was it industrials? Or was it commercial vehicles? And part two of my question, which is on a different tangent, is that you had a market strategy of crude oil prices being around $75 to $80 a barrel. With all the volatility that you have seen in crude oil prices falling to 60, now heading back to 70, do you see some benefits percolating into the current quarter as well?
Okay, two very different questions. So let me answer the first question first and then conclude with the second one. The volume growth has been 8%. And if you've been an observer of our business in the industry, you will realize it's one of the best that we have delivered so far. And this has come on the back of very handsome double-digit growth in our passenger car as well as commercial vehicle oil segment. We have also been able to deliver healthy growth in high single digit for our two-wheeler business. So all across personal mobility and commercial, we've been able to fire on all the cylinders. Otherwise, growing this large business in lubricant in high single digit volume would have been really, really difficult in a quarter like this. And hence the combination of all of three has worked really well for us. Now, on your question on extremely volatile crude oil, now I keep educating everyone that crude oil is of course the raw material that goes into creation of base oil, and base oil is the raw material for lubricants. And while we see a correlation, the correlation is not very strong between the prices of crude oil today and the prices of base oil in the market today, because there's always a lag and the correlation is weak. Now, it does benefit sometimes, it's adverse in other times. The task or a job of a brand like ours is not to pass on these shocks on a regular basis to our consumers, because customers don't like those shocks. So we'll absorb the shocks when the prices are high, and we will of course make some margin for a short period when the prices are going down. It is the management of my team which of course
Right.
invests in these to deliver consistent results for our stakeholders. So as long as I'm predictably boring, I think I'm doing a good job, and so is the company.
All right, Kedar, thank you so much for sparing time and joining us today to discuss your quarter gone by. Wish you good luck for the rest of the year as well. The management of Castrol India discussing the road ahead for the company. The stock, though, at the lowest point of the day, almost 2.75% lower at 204. The other